This is a credit card, one of the modern world's greatest inventions. With this simple piece of plastic, you can go to any store and buy whatever you want. You don't even need to spend your own money when you make the purchase. To make things even more exciting, your credit card issuer will reward you with bonuses and gifts every time that you use your card. The more money that you spend, the greater your rewards. Certain cards also give you access to airport lounges where passengers can get free food and drinks. The possibilities are truly endless. So if you've been around this channel for a while, the most skeptical of you will be asking me, what's the catch? Credit cards are an amazing play on human psychology. They give their holders the feeling that they have money, even though they don't. So if you take away all the distractions, a credit card is nothing but a plastic loan that is given to you by a bank. And like all loans, even your credit card bill needs to be paid back eventually. So for today's video, we're going to talk about the following. What's the history behind these plastic loan machines? How do they work? And what's actually going on when you swipe your credit card? What is the history behind credit cards? Although credit cards seem like a very modern invention, they have actually been around for a while. Throughout time, merchants have been accepting credit. This practice is so common in India that even to this day, Kirana stores keep credit accounts of well-known customers and sell them their groceries on credit. This kind of credit relationship depends more on the trust between the store owner and customer and rarely involves more than two parties at the same time. Much like how it is in India, in the US there was a credit system that developed in the 1940s between customers and the stores that they used to frequently go to. Each store used to offer customers their own card called a charge card, using which customers would be able to purchase goods on credit. However, as the number of stores offering credit increased, so did the number of cards each customer had to carry around, and this quickly became an inconvenience. By the late 1940s, charge cards were well established in department stores and oil companies. However, restaurants did not have any card system in place. That was until Frank McNamara came up with the idea of the Diners Club. As the story goes, it is believed that in 1949, Frank was having dinner with a business associate in an expensive Manhattan restaurant. When the bill came, he realized that he had no cash to pay. By the time his wife arrived with the money, the bill was already settled. The shortness of cash led McNamara to the idea of using charge cards in restaurants as well. This idea led to the creation of the Diners Club, the world's first multi-store credit card. In its first year of business, the Diners Club grew to about 10,000 members from New York's business elite, with 28 restaurants and 2 hotels prepared to accept billing using these cards. At the end of the month, the Diners Club would bill their members and send the payments to the restaurants, taking out a 5 to 7% processing fee for the service. So today's word of the day is apocryphal. It basically means a widely circulated story that might not be true. This may well be an apocryphal story, but there's no denying that before the time of plastic cards or digital payments, being free from carrying an excessive amount of cash by simply presenting your Diners Club card was truly groundbreaking. Major banks would soon launch their own consumer cards, but with a twist. Instead of users having to settle all of their bills at the end of each month, by offering revolving credit, the bank cards would become the credit cards that we know today. Cardholders could carry their monthly balances forward for a finance charge. Bank of America was the first out of the gate in 1958, mailing Bank Americard credit cards to select counties in California. In 1966, the Bank Americard went national to become the nation's first licensed general-purpose credit card. It would soon be named Visa a decade later to acknowledge its growing international presence. In the 1960s, after the invention of the magnetic stripe by IBM, credit cards became more and more popular. When combined with point-of-sale devices, data networks, and transaction processing computers, this was the catalyst needed to accelerate the proliferation of the global credit card industry, which now handles $6 trillion in transaction each year. So what are credit cards and how do they work? As we mentioned earlier, a credit card is nothing but a loan granted to you by a bank. Remember, it is a loan. This loan is generally granted for a period of 45 days and it is completely interest-free. This is the key difference between a credit card and a debit card. When you use a debit card, you are actually spending your own money. But when you use your credit card, you are using the credit card company's money. Every time you swipe your card or you make an online purchase, you're effectively taking a loan. With each purchase, your balance or the amount that you owe to the bank increases. Naturally, because your balance is increasing, the amount of credit available to you decreases. Credit cards work on the principle of revolving credit. This means that each customer is offered a line of credit that needs to be paid back at the end of a certain period. Customers who make purchases on their credit cards must regularly pay them back as well. If the card holder reaches the limit of his line of credit, then he needs to pay down his debts before he can take out more loans. To better understand how credit card works, let's learn a little bit about the players that help the system function. There are 5 main parties involved in a credit card transaction. The first party is, of course, the consumer who owns the card. The merchant is the business where the retail consumer makes a purchase. It could be a grocery store, a gas station, or even an online store. The third party is the issuing bank. The issuer incentivizes retail customers to get a credit card and ties up with different companies to offer attractive discounts. The acquiring bank handles the merchant's transactions. It is the job of the acquiring bank to tie up with retail stores and give them point of sale machines. Whenever a cardholder uses a credit card in a purchase, it is the acquiring bank who releases the funds to the merchant's account. The payment network connects your card with millions of businesses that accept credit card payments. There are 2 main players in the payment space, Visa and MasterCard, and both of these companies offer their infrastructure solutions to help process and settle credit card transactions. Now that we know the main players, how does using a credit card actually work behind the scenes? Here's an example of how a credit card transaction works. Nikhil is a customer who wants to go out buy a burger. He has a credit card that has been issued by HDFC Bank and uses the Visa payments network. Visa's job in this scenario is to create a network of communication between the issuing bank, which is HDFC, and an acquiring bank, which in our example can be ICICI. It is the job of ICICI Bank to sign up with merchants like Burger King when Nikhil will go to buy his burger. When Nikhil buys his burger, he will need to swipe his card in Burger King's point of sale system. Once the card is swiped, the information is then sent to the acquiring bank. ICICI Bank will then take a look at the card's first digit, and on seeing that the first digits are 4, it will send the transaction over to Visa, who will then identify the issuer. Once the issuer is identified, Visa will then send the full card number, the merchant's name, as well as the bill amount to HDFC Bank. At this point, HDFC Bank needs to make a decision whether to approve or reject Nikhil's transaction. If HDFC checks your account balance and finds that you have enough funds and is also reasonably confident that it is in fact you initiating the transaction, then HDFC will tell Visa that everything is good and will approve the transaction. Visa will then get in touch with the acquiring bank, which is ICICI, and instruct them to transfer funds into the merchant's account. Confirmation of this fund transfer will reflect on Burger King's point of sale system and the transaction will be completed. In those few seconds where you're waiting for your card to be authenticated, there are thousands of checks and rechecks happening between parties that you can't even really see. It really is a crazy process. The interesting thing about this entire system is that there is no point in the whole transaction where Visa is in direct contact with the consumer. Visa's only job is to connect the acquiring bank with the issuing bank and vice versa. If you have any issues with your quality of service, you cannot go and complain to Visa. And with that, we come to the end of our first video about credit cards. For a developing economy like India, there is huge potential for growth in this industry. The number of credit cards issued in India has grown at 20% compounded annual growth rate over the past 4 years. In spite of the COVID pandemic, India's thirst for credit seems to be increasing. Over the next 10 years, our country is expected to add tens of millions of white-collar jobs. With millions upon millions of people earning their first paychecks, this represents a massive, once-in-a-lifetime demographic dividend for credit card companies to cash in on. In our next video, we'll talk about what a wide-scale adoption of credit actually means for people living in a modern society. Owning a credit card without good financial education can be like playing with fire. So why have credit cards become so popular, and why are they one of the biggest generators of bottom line for financial companies? Join us as we talk about the pros and cons of using these cards in our next video.
And finally, join us as we discuss whether you should get one of these cards for yourself.
And with that, we come to the end of this week's video. I really hope that you enjoyed this edition of Filter Coffee Finance. Don't forget to like, share and subscribe if you loved the content that you found here. And if you really did, check out my other videos on investing and finance as well. If there's any specific topic out there that you'd like to see in the future, please do let me know. As always, we are open to any tips and suggestions that you might have in mind. And until we meet again, this is Filter Coffee Finance signing off.